And good morning, good afternoon. Welcome to the halftime report here presented by Tackle Trading. Coach Matt wearing red. I think he's got Tiger
Got Tiger on my mind.
channeling. Is
Got
that
Tiger
right?
on my mind.
Tiger Tiger only wears red on Sundays, dude.
Listen, no, my wife bought me this yesterday, and she says I look good in red. So this is the first time I have worn red in literally probably 10
I
years.
like it.
Yeah,
I like it. It just does look like a Sunday golf shirt, when you're walking down 18th hole and whatnot. Tiger Woods kind of pump. I like it.
Ryder Cup starts tomorrow. Okay,
Okay.
the U.S. has not beaten the Europeans in 20, 25 years on European soil. I'm very excited for the Ryder Cup. I'm going to be rocking the red all week long. I'm going to be waking up at 2 o'clock in the morning watching the Ryder Cup. I'm excited for Tiger.
I like it. Sports are great. Competition is great. There's no question about it. For whatever
Patriotism is
reason,
great, Tim.
uh,
Patriotism.
patriotism. I never got pulled into the whole Ryder Cup thing. I don't
Do you
know.
not get excited when the U.S. wins gold medal at
Oh
Olympics?
yeah.
Okay.
Well, and even for soccer, I'll tell you, like in the World Cup on soccer, I usually don't care at all about soccer, but I have when the U.S. does well,
World
I
Cup.
always care about it. Yeah, for sure.
The U.S. not going to the World Cup this past time. I mean, everybody's like, "What's going on?" You want to support your country. Yeah, let's all wear red, white, and blue. Let's pull out our colors. Let's support the Ryder Cup. Let's give the U.S. some momentum. Absolutely.
It's a lot easier to focus on those other things in life when your accounts are in the green, by the way, which markets are actually
good day. Good day.
doing pretty well the last couple of days. I really like the action.
The Wayfair trade, the Nike trade, the CRM trade.
Did you see Square?
Square. I was going to say Squarespace again. I got that close. I got that close. Okay. I've only been calling it Squarespace for so long. Square doing absolutely fantastic. I mean, it's been a real good week for the picks, no doubt.
Yeah, let's dig into each one of them. Start with the S&P 500. Obviously, a day after the Federal Reserve announcement. The end of the day yesterday was kind of interesting, Matt. In fact, I went to pick up my kids from school. You called me on the phone and you say, "Hey, Tim, what do you think of the market?" And I'm like, "Well, when I left, it was nothing, and you're like, "Well, it's selling right here at the end of the day." The market then came back today and boom, just rallied right back. Seemed like some profit taking, small volatility action, and then we just came right back through, right?
I'll tell you though, I'm it's kind of like that hindsight being 2020 here. My bullish trades obviously didn't like the market kind of coming down after the Fed announcement yesterday. But what happened was fascinating. It came down and kissed the 20-day moving average, and then it bounced right off that 20-day moving average. And I'm going to tell you, Tim, I'm looking at quite a few trades here today. And if we would not have sold off coming down into the 20-day moving average, but you would have still had this type of movement, you're coming right back up into resistance, which would have meant you would have had to wait another day for it to trigger back up. I love the price movement here. I love the bounce off the 20-day moving average.
In some ways, you can even say that we are increasing trend. If you look at the relationships of those moving averages, Matt, it tells you something about the trend strength. Back in April, May, and June, they were a little bit tighter to each other, but now they're expanding from each other.
Well, not only are they expanding, Tim, look at the consistency here.
Yeah.
Look at that consistency. Look at your 200-day moving average. Okay. As your 50 and your 20 are now expanding on top of the 200, that shows you this trend is increasing its short-term momentum here. And not only that, but you've been very consistent on your moving averages. You've been very consistent on your trend lines. There's nothing to take here. I mean, yeah, we got to talk about what the Fed did yesterday, raising rates and, signaling, taking away the accommodative language. I want to talk about that, but take the Fed out of the equation, focusing purely on the technical situation. And this is a very strong buying signal.
The language was changed. And I know that I saw your Twitter account, so I know how well you dug into it. You went and read the statement and you had some opinions about it.
I read the statement, and then I was live tweeting during Jerome Powell's Q&A basically.
Mm-hmm.
And for those of you who don't understand that Q&A portion of the Fed meeting, basically what happens is they release the statement and they release the actual what happens, right? They increased a quarter of a point and then they release the statement. Now, the statement, I talked about this yesterday as well, Tim. The statement is literally this short. It's not long. And they keep so much of the same language per statement. And like Janet Yellen, for 4 straight years, she was always looking at removing or changing some of the language. There is one piece of that statement that they removed from yesterday, and that was the accommodative language. the central bank since 2009, and I do think this is important, Tim, the central bank from 2009 until 2018, literally yesterday, had been accommodating. And what that means is their monetary policy supported economic growth. That's what accommodating language means. So when you remove that language, you basically go to a neutral stance with the central bank, basically saying we're not going to accommodate this, but we're also not going to radically increase the rate to decrease the momentum either. And so basically they went to a neutral posture yesterday with their monetary policy. What was fascinating, and if you want to check my live thoughts about what happened yesterday, I do have a thread over there on Twitter under my Matt Justice 13 account. So what happened yesterday with the speech was fascinating, because in the language they removed it from the equation. But then when Jerome Powell, and this, I was happy until this, and when Jerome Powell said that they are still accommodating. So in the speech, he said they were still accommodating despite removing it from the language. And that kind of was a little confusing. And I've given Jerome Powell a lot of credit for being transparent. That was not transparent in any capacity. I disagreed with quite a bit of what Jerome Powell said yesterday, but I also agreed with some of that. So if you want to get my full thoughts, just go look at that thread over there. It's fascinating to watch those types of things.
The subtleties and the nuances of trying to interpret what the Federal Reserve actually means by taking this word out, or that you would think that it's like rocket science, the way that they coddle investors in the market it's always been an exercise that I find a little bit odd, quite frankly. How every little word means something that we're supposed to interpret and dig into and then debate about it. I love the analysis. I agree with you, by the way. Taking out the word accommodative is telling us that they are changing posture. I know the market likes the action here today. Obviously, the S&P is up strong.
Before we get into that, I want to get into some of these things, because I do think this is very, very important here. Removing that language is important, okay? Number one, when Powell talked about just a couple economic factors, Powell talked about GDP. He expects GDP in 2018 to be somewhere around 3%. He expects it to slow down as we come into 2019. And then he expects by 2020 to see it contract underneath 2%. So the Fed looks for a very short-term strong economy based on a lot of the tax cuts from 2017 trickling in to 2018 and 2019. But outside of that, he sees the economy start to slow down. Another thing he talked about was the American consumers and inflation. He literally said, that in their data, they're not seeing any levels of inflation. That to me, and he specifically talked about housing, how housing was actually more affordable today than it was pre-crisis. And I just felt that was just an absolutely ignorant statement to give, number one. He also talked a little bit about the trade tariffs. He got asked a specific question if the trade tariffs have had any impact on anything so far, and he said no. In our data, we have not seen any impact. Well, Jerome Powell, let me kind of help you out with something. That impact doesn't happen on the announcement of trade tariffs. That impact happens over time with the increase of cost and goods. And I'll just give you a quick example today. Tim, I'm finishing my basement here. I was scheduled to finish it in October. It was only about a $50,000 project, right?
Mm-hmm.
And basically I got a bid from 2 months ago. We put it in October because my contractor was finishing some other projects. He emailed me literally this morning saying, Matt, I am so sorry, but I cannot complete that bid under the current price tag. With the trade tariffs and whatnot, my costs are going up to such a level that if I do this job under that price tag, I'm going to lose money. And I basically said, listen, you're okay. Okay, you're okay. I'm not going to force you to do it. I understand this. Let's revisit this when it slows down. Okay, but that has a real impact. We saw that in housing data today with a drop in housing data today. We've seen a little bit of not the core durable goods, but durable goods seen a little bit of drop today. So there is an impact to there. And so I did take some disagreements with what he said in his speech, but in the accommodating language is the most important part of that. This to me will have an impact over time.
Well, today's impact, the market likes it. You know, the S&P is up. Obviously, gold is down. The dollar we're going to talk about. There's
We'll
some
talk
stuff
about
going
it.
on in Italy as well. Let's go to the Dow next. We've been moving the Dow up second. By the way, today you would probably even be willing to debate that because the Nasdaq's so strong here today. Love the pullback pivot though. You know, from a technical perspective, the orderly nature of the red candle, red candle, red candle, green candle like that, Matt, it's textbook. You love that kind of signal. And obviously XLI, something we'll dig into later. Talk a little bit about those triggers.
Well, number one, I love the trigger on XLI. This is a great retracement. You can kind of see how it works here. Big candle, smaller candle, upward movement in price. Tim, look at that nice little hammer candle on the industrials, right? That is a beautiful textbook setup for a bullish retracement. Love that setup. On the not discretionaries, on the YM contract, you're dealing with a lot in terms of industrial, but again, you're dealing with a little bit of the banks out there as well. Not the Goldilocks retracement we got out there. Okay, not that Goldilocks that we've talked about that would come back down into that 20-day moving average, but a really good retracement nonetheless. It does fit the parameters. 3 down days, upward movement in price. That's a good trigger there as well. I got the YM ranked second right now, Tim. I know the Nasdaq is showing tremendous strength, and I got some good trades on the Nasdaq going right now. But I was looking at it, and we'll go into this a little deeper here in a second, Tim. But based on what we're seeing in YM and based on what we're seeing in XLI, these are very clean setups. That NASDAQ setup is not a clean setup. These are very clean setups. And Tim, I ran a scan into the industrial sector today, and I found, you know, what do we got here? 15 stocks that are setting up really, really good that we'll go through here in a little bit.
You know, I'm a personal believer in tech, but only in specific tech. You know, it comes down to stock picking in that sector. If it wasn't for the weakness in Facebook, Google, and some of the social medias, Matt, I would be more bullish on the NASDAQ than I am. I'm still moderately bullish. I still like it, but I'm with you. The Dow has really charged ahead here. And there's a lot of reasons why. I like the industrial play. We'll look at some of those stocks here in a minute. Give me a quick read on the NQ, though. I do want to take a peek at the chart.
Big day.
Beautiful day. And so much of it, by the way, is Apple and Amazon.
Apple. Yep, Apple and Amazon.
In fact, why don't you bring Apple up and let's talk about the heavy weighting on the top side of this NASDAQ. Apple Computer up 2.3% today. They were actually upgraded to an outperform by JP Morgan, or heavy weight, or whatever it is they call it. It's funny how the analysts all have their own different lingo.
You might have to create another level above upgrade to whatever you're upgrading to on Apple.
I've been bullish on Apple for a long time. W triple top pattern type of consolidation.
I'm not in it though.
I've got a time spread that's delta positive. Basically, I own leap options that I've sold short-term options against over time, and I've got an open risk graph where I want it to go up, and it's benefiting. It's at the resistance though, Matt. I mean, you know, the news brought it up here. You got to ask the question: if you've been in Apple for a couple of weeks and you've been waiting for a rally, is this profit taking?
No, you don't pull that off. If you've been in Apple, because if you got into this trade here, your stop loss would have been under here. So if you've been kind of sitting here getting eaten up by your time decay off some type of option trade, you finally made up for it today. No, you got a lot of strength moving up into that, Tim. You're up 5 points today, 2.36%. It's you know, outperforming what the other stocks and the indexes are doing. It's outperforming its industry. It's outperforming outperforming the sector. You got a lot of momentum on that. RSI just crossed back above 50. No, I don't think this is profit taking on Apple. This is hey, it's about time you get your ass moving on Apple, but I don't think it's profit taking.
I agree, actually, and I'm not taking it off, but I'm sure when you're stuck in a trade for a while, and if you're the type of person that was looking for some kind of instant gratification, it can be a learning curve to learn to be patient about trading. You know what I mean? Mm-hmm. And especially with profit taking, there's an old mindset in markets, guys. Be patient with profits and be quick to get rid of losers, you know, and that takes some work and some time to get to that point where you can actually do that. Apple's looking really good here today. Take a peek at Amazon. I want to go through a couple of the different FANG stocks here. Another same, almost the exact same pattern.
Almost the exact same chart.
Yeah. Ooh, Amazon's looking great too. I mean, it's tough to want to pull the trigger up here at 2011 when it was just down, 1900.
No, but you could do bull puts.
There's plenty you can do.
I don't like, if you're not in Apple or Amazon right now, I don't think a directional play is appropriate until it breaks out of the resistance levels. And I'm not talking these intraday resistance levels back here. I'm talking the all-time resistance levels. I think
Yeah.
if you're patient and you wait for that type of setup on a breakout of Amazon or on Apple, that would be a very good signal. But with the strength you're seeing over the course of the last 4 days in Amazon, the strength you're seeing over the last 4 days in Apple, especially today, both of them up close to 2%. Yeah, issuing a bull put spread, what's the worst case scenario on the trend right now? You say the short-term trend is neutral, bull put spread would be great on that. If you have a slight bullish bias, bull put spread would be great on that. If you think it's a bullish trade, but you don't want to take the directional risk, bull put spread is great on that.
I agree with all those things. Let's go on to the RTY. And, Amazon, one of the best things about that chart was when it pulled back into the 20, 50-day bull zone. And it was clearly a good signal. Hopefully people took advantage of it. RTY is neutral in my opinion, Matt. I know it's got a little green candle today. Yesterday's candle threw me into some concern. Number one, you closed below the 50-period moving average. Okay. In fact, I think you've got caution here on the RTY on the downside, and I'm not worried about it necessarily. I'll wait for the action to play itself out.
I have no trades in small and mid cap stocks right now, and I'm not looking at them right now.
It feels like it's rotating over. The market gets a pullback. This one's probably going to take it the hardest. I had a hedge. I actually had a hedge on the upside, Matt, for quite some time, where I was worried about it.
Your bear call.
I was.
You did it. By the way, Tim, absolutely great job teaching the cash flow condors webinar from last night. And if you guys haven't seen that cash flow condors, make sure you check it out. I'm sure we'll post it to YouTube here, but you did an absolutely fantastic job teaching that system to traders that already have it, a lot of them, but even some that didn't have it. I thought you did such a fantastic job on that. So well done by you. But in that system, when you're looking at that hedge, you're talking about your bear call. Yeah. So what was your strike prices here? You had like 1800 by 1810.
I did. Well, I have both October, November on, so I have two different expirations, but they're around the 1800 mark. I think the one's 1800 on the short strike, the other one's 1810.
Yeah. So back here, when we felt like it was a really good setup, that's when you're like, hey, listen, if that does trigger, I need to hedge myself before it does, right? Yeah. I mean, that's what a hedge is, guys. It's to protect against what if type scenarios. And the what if here, Tim, is if it broke out of 1750, it was going to run to 1800. That's what was going to happen.
Correct.
And so you basically said, listen, I got to hedge that system. But now, when did you pull it off?
Yesterday.
Yeah, there's no risk to that upside right now.
I mean, here's the thing. The purpose of a hedge is like a brake pedal.
By the way, cash flow condors is killing it the last 4 months.
Oh yeah, no, I mean, I've been very happy with the system for a very long time, Matt, for years. And I'm the type of trader and investor that will hedge risk when I see it, because I trust my eyes, I trust my signals, and I know how to measure that risk in a dynamic way. One of the things I was very happy about last night, Matt, is we had a lot of students who should have already finished their cash flow condors and been trading it, that got reignited and excited about doing it.
Yeah, and I got excited about that too, because we had a lot of I want to do a little shout out to Legacy Education here, Tim. Legacy Education does such a wonderful job of teaching people how to trade, how to invest, how to control their financial future. And I saw so many of our Legacy Education students, members of Tackle Trading yesterday in that webinar, and they all have access to this system, and they may not have, because they're going through so much, they may have forgotten or put it on the back burner. And so that reintroduced this system to them. And I just wanted, I was just so once we got done, I just sat back and I was like, wow, you could see the quality of the student that comes through Legacy Education. You can see that quality just through the questions, through the comments, through the interactions. And so just from the Justice Boys, from Tackle Trading, from the Halftime Crew, Legacy Education, great job. Keep on pushing it. Keep on changing lives. You guys do a great job.
Outside of the cash flow component here, which obviously is a core part of my system, your system, what people trade, does this small cap weakness give you concern about the broad market?
No, I'm not concerned about the broad market. I'm concerned specifically about the Russell 2000. I've been concerned about this for weeks now. I have not made a trade in this for weeks. I came off of this right back here when you kind of had that failed, confirmation come right back down. So no, it's been on the fourth for me. I'm actually probably a little more leaning towards slightly bearish, to be perfectly honest with you. And if you're looking at, if you have a lot of trades in the blue chips, right? Yeah, not the NASDAQ so much, but the S&P 500, the Dow Jones, and you're looking at maybe potentially finding some stocks to add bearish delta to your portfolio. I would look at small and mid cap stocks right now for potential bearish setups to offset some of that bullish behavior in the blue chips.
You know, it's interesting. In a heat map, you can have it set to the S&P 500. In fact, go to the market skyline on Tackle Trading. I want to show the team something you can do. And you can get a feel for which areas of the market are performing on the S&P 500. But remember, the S&P 500 are generally large cap stocks. We're not talking about Russell 2000 stuff. So when you go to the heat map on the left, Matt, I want you to find where it says full. And as soon as it loads up here, I love this page, by the way, on the market skyline.
This is where you do your daily routine.
If you guys aren't starting right here every day, make sure you bookmark it. I think it's a very good page. Now, the S&P is good. And
the lounges, everyone in the lounge starts here. Why? Because I start here.
I love it.
Everyone in the lounges.
Well, we all do. I mean, we have specifically designed this trade center for people to do their daily routine here, you know, from the market skyline to the news to the economic calendars, checking your market reports, you know, getting your trade journals, you name it.
Click on full over there on the left and do a year to date. Well, actually, I don't know. We can flip it through a bunch of different stuff. So now you see the picture of the entire market. Now we've got a lot more little boxes in there. So obviously all the different small caps are now being added. It's the full market, I believe, on the New York Stock Exchange, but you look at how many different companies are there. Flip through some different performance metrics, Matt. Like,
let's go year to date.
Sure.
So there's year to date.
Look at the mix in the small boxes.
Yeah.
Amazon, Microsoft, and Apple, Visa, you know, MasterCard. You see which ones are shining greenest, right?
They're all the large cap stocks.
The biggest spots.
I mean, you're talking Google's up 13%. You would say Google's underperforming right now.
Correct.
But Google's up 13%, Oracle 9%, Adobe 53%, Salesforce 54%, Microsoft 33%, Cisco 26%, Nvidia 37%, Amazon 68%, Apple 30%, Visa up 30%. You know, it is across the board. And the thing about it is, Tim, if you were to look at this just say 3 weeks ago, that wasn't the case. The Russell 2000 was doing really, really, really good. It was the second leading index coming into year to date, other than the NASDAQ. It went NASDAQ, Russell 2000, S&P 500, and then the Dow Jones. The S&P 500 and the Dow Jones, those are your two blue chip stock indexes. They've played catch up over the last 2 weeks, Tim. That's what you're seeing here. You are seeing rotation come out of small and mid caps into the blue chips, and that's not going to just stop overnight.
No,
that thing's just starting.
Yeah. And I think that's what portfolio managers are doing. I mean, because you got to put your money where it's working. People on Wall Street that are good at this, they know what they're doing, right? And they're going where the performance is and the stability.
Especially coming to the end of the quarter.
Kick down to a month now. Yeah. Because really this month has also been a mark of that. So like a 1 month performance. And you see now a very big mix in the market. Certain areas are weak, certain areas are strong. September net on net, I know the NASDAQ is at a high, and I know Apple we just saw at a high point. But Matt, it's been a very mixed month for stocks when you start going into sector by sector and all that kind of stuff. And that's pretty typical for September, right?
It is typical for September. September is probably the worst performing month and one of the most mixed months that we have of all the calendar season. It's September where and I'd have to check my seasonality here with Noah, but I do believe September is the worst performing month on average against all the other months in the marketplace. And that's a little bit due to, you know, the 9/11 in 2001, what happened there, Lehman Brothers in 2008 happened there. You know, so you have some historical connotation or perspective about why September has historically underperformed. But even if you remove those two situations out of the equation, it still underperforms historically. It's typically in October, late September into mid-October, where you start to see rotation happen from a seasonality perspective of what we call the Christmas or the Santa Claus rally, right? And so the Santa Claus rally is something that traders always get excited for, guys. The Santa Claus rally happens from mid-October, typically through mid-December. It doesn't go through Christmas, Tim. It literally lasts till like right after, Cyber Monday, Black Friday, and all those, after, Thanksgiving type sales. And then you start to see stagnation throughout the rest of December. So typically speaking, guys, traders coming into October, we remember this over and over and over again. And so coming into October, yeah, I'm bullish in the market, but it's just not small and mid caps.
Mixed market. This is where we talk about relative strength and weakness across different indexes, why we look at all of them. To me, the Russell has got me some concern.
This, if I had one thing I could show Jerome Powell, if I had one thing, I would show him this chart.
Is that why you're wearing that shirt today?
Yes, because okay, there's a method to my madness, Tim. Because Jerome Powell said that there's no evidence in his data that we are seeing overinflated prices in the stock market. He said that. That is craziness. What you're seeing here is the PE ratio of the entire marketplace, Tim. The average PE in the S&P 500 is 34. That is the second highest of all time. Not going to change my short-term behavior, by the way.
Okay, all right, I'll take the point counterpoint. I agree with you, by the way, but somebody has to at least state the point of what the Wall Street guys would say. We don't measure past PE. We look at forward PE ratios based on.
Yeah, we don't look at real earnings. We look at gap earnings that removes any negative possibility. Shut up, Wall Street.
Math fight. All right, not with me. You math fight Wall Street on that one. But that is what they say, and that's what they price, by the way.
Yeah, they modify everything to fit whatever their agenda is.
They adjust the data to fit their agenda. Oh my, que sera or c'est la vie. I'm not sure which one today.
I need to get a tinfoil hat where I can just put it on.
Hey, your birthday's coming up. I'll buy you a big tinfoil hat.
I want a 10-gallon tinfoil hat from you, my friend.
Well, all right, let's do it. Let's move back into the charts in the market. And actually, I want to break down the dollar. There's some interesting stuff going on with those currency markets as well. Start with the dollar. Dollar's rallying, Matt. It's a huge upside move. A lot of that is weakness in the euro because of some of the news that was happening internationally and whatnot. So much uncertainty. I also saw some headlines about Italian banking, I believe, and their budgets and whatnot. That Italian debt crisis, Keith King has talked about it for 6 months or a year. Oh, yeah. Eventually is going to blow up, based on what I know about the situation, don't you think?
The Italian situation has the ability to be far more risky for the Eurozone than the Greek situation from 5 years ago. So, yeah, I do think there's risk there. I think there's political uncertainty. There's banking system risk. I don't care what Mario Draghi says. He's a known liar. So in terms of that, yeah, I do see the risk there. I'm a little concerned about it. It was fascinating to watch how the dollar responded after the actual announcement, Tim. When you look at kind of the intraday movement here on the dollar, this is kind of the announcement. And this is why you don't trade the announcement, Tim. Mm-hmm. Everybody and their dog for about 45 minutes to an hour after the announcement lost money. Everybody who traded that time period, I don't care what they say, they lost money because they got triggered in, triggered out, triggered in, triggered out, triggered in, triggered out, and they just lost because of the volatility of the announcement. This is what we talked about. You wait for the secondary move. And when you start to see the volatility slow down here, you get those secondary moves, Tim. And then the Eurozone opens up. And when the European banks opened up, that's when you started showing the tremendous weakness in the euro. That's why the bank open trade is so important. And you've done nothing but show appreciation after that.
Yeah, currency markets, obviously.
The movement was not based on the Fed. That's my point. The movement was based on the European bank open and showing the weakness in the euro.
But that's the point in currency, though. There's so much churning back and forth. You're still below moving averages. To be fair to the chart here, and you know that fundamentally I've been bullish and making that argument for a long time in the short to near term, mostly because of the weakness I see in the euro and the yen and the other currencies. But it did not play itself out like this.
I'll tell you right now, if we doji at 95, I'm shorting the dollar.
It just depends on which cross pair, right?
It's not going to be a basket. It's going to be against currencies. I'm not a novice trader, Tim. I'll go look at the basket. I'll go look at the individuals, but yeah, yes, I will find shorting opportunities against the dollar off a bounce of 95. Tim, you can't, and this is what I'm going to argue here. I'm not in any trade on the dollar right now, but I'm looking to short it. First and foremost, if you look at just that action right there, That's a bearish downtrend. You have lower lows, lower highs, lower lows, lower highs. That's a bearish downtrend. Okay. You have a short-term bearish downtrend in a longer-term neutral trend right now. This, to me, I can't buy that. I'm waiting for it to slightly doji here and then downward moving in price and then short it. That's what I'm looking at doing.
I couldn't argue with the trade technically set up. There's no doubt about it. Dollar, maybe the better trades are going to be off of what this dollar volatility is, and there's usually relationships. Dollar rallying here today has got the gold prices dropping. At least that's what they're attributing it to. Gold's been in a downtrend for a long time. This was finally the break below support.
Is that a break trigger?
It is, yeah, by definition. I wouldn't enter it as a short here today because the 1190 zone, now you're flirting with 1190 on the intraday, and that could just end up being a wick to hold support.
Yeah.
I've had support at 1190. I've been calling that for a long time, not 1200. Now, I know 1200 was a trigger, and it did sell here. But no, to me, it's not an entry trigger and unless I get some more information personally.
You got an increase on volume in the last two candles, both very bearish here. Short-term play down to the downside, I can understand that, but I don't know. With my analysis on the dollar, I couldn't take a short gold trade right now.
Yeah, and when you're going to get churning volatility where the dollar will come back and forth, gold will rally back into 1200 probably most likely. And even if you do want to go short, which by the way, I'm more bearish on gold in the short term than probably you are. I've been talking about downtrend.
I would say that.
And the primary trend in gold winning out. But I don't think you necessarily have to chase it here at 1 o'clock East on a Thursday. You could probably wait for a little backfill intraday.
It's kind of what I said yesterday, not in the halftime report, but we were talking while it was about 1:30, right? About 30 minutes before the close. And I was looking at pulling the trigger on that Netflix trade. And, I pulled the trigger on it. I got into it. It was above 380 at the time, coming into the close. And let me kind of drop this down into a 15-minute chart here. So basically, it was intraday speaking here. You're showing kind of slowing momentum here, and then it breaks out right here of 380. And that's kind of when I got into the trade. And then you and I are talking right into this right here when you were on the run and said, well, you know what? You kind of deserve for buying at the top of an $11 movement here. And Tim, you said, yeah, but it can move $20 in the next few days. And I said, I know, I don't regret the trade, but it did sell off $4 immediately after I put on the trade. But looking at it here, you're now starting to see price appreciation getting back up above that 380 period. But the same type of analysis could be made on gold here, Tim. I just don't find it healthy and typically very successful by getting into the trade after it's already moved 11 points, right? I mean, gold doesn't move 1% very often. And so I think it's maybe a better setup down the road a little bit.
Yeah, I agree with that 100%. And that's where intraday timing can improve your trading. You first learn how to read the daily candlesticks and you develop rules and all that decision making, and that will get you to a point where you're pretty proficient, consciously
Absolutely.
Competent, a term in education. But then there's the little nuances that change and it's part of learning the 24-hour market cycle. Maybe at one of the halftime reports here in the upcoming weeks, we could talk about that 24-hour day market cycle. And
that'd be a good topic because it is a very important topic. It's in fact, it's probably the most important topic to understand if you are a day trader in the currency market, understanding the bank opens, when banks shut down, how to approach that. I would say the most important topic in day trading Forex is understanding the banking cycle. And the second one is understanding news-based events.
And Cody, great job on that put diagonal on GLD. Obviously staying theta positive allows you to be a little bit more patient with trades like that. Great job, Cody, out there, and great job, halftime crew. Crude oil, Matt, a couple of dojis here. I'm starting to get interested in crude oil. Now, I'm not long, and I'm going to get long at some point. I will tell you that, unless the action dynamically changed. Either a break above 73, which I think is a triggerable entry point, or a pullback into the 70 zone and then a pivot trigger. Either one of those, the break would happen fastest. I don't see this happening until next week for me. But what's your read on crude?
I wouldn't buy that break on above 73. You got 74 resistance areas. You'd probably have a negative reward to risk ratio. A retracement back down into 70, I think you could justify it. I think that's the better signal here. But I do have concerns intermediate wise on crude oil. I have concerns coming into the next few months.
Yeah. Yeah. Commodity markets, there's going to be a lot of action, obviously, as we go through them. Take a look at Bitcoin last before we get into stock individuals. Bitcoin has shown some resiliency the last month or so. I know it's not a chart you would buy. I know it's not something that you would go long on, but it is holding those 6,000 zones, for a couple of months here. And the news has been back and forth. I keep seeing positive news stories in crypto. I got to tell you, doesn't make me want to go long any new crypto. I already own some Ethereum and some Ripple long term. But what's your take on Bitcoin? Any?
The argument you can make is that you like you like it becoming more stable, right? It is becoming more stable from a price action perspective. We're not seeing the volatility that we saw in 2017 and 2018. You're seeing some particularly stable conditions in Bitcoin, not necessarily the other cryptos out there. But I don't honestly, and I'm dead serious here, Tim. I don't know what it would take for me to buy crypto. I have no clue.
It's probably some time and a lot of different information and news away, which is not a bad thing. You should want to invest in things that you understand the volatility, and this one does have complexity there. We'll keep looking at it because I still am fascinated, obviously, by the topic. While we get into stocks of the day here, Matt, you had one area particularly in the market that you were fascinated with that we wanted to dig into, and that was the industrial sector. Why don't you set this up for the team and let's have a conversation?
Well, we've talked about for a month and a half now about industrials, trying to play catch up, breaking out, breaking out of triangles, breaking out of resistance. This is really, out of all that, Tim, those were decent trade setups. But this is the best trade setup you have had on the industrials this year, in my opinion. You have not had a better trade setup. It doesn't mean it's going to work out. But from a pure technical perspective, this is the first time year to date we have seen anything remotely, any true just technical condition. It's been volatile. It's been crazy. It's been out there. And so when I'm looking at it today, and shout out to Coach Frank over there at Tackle. Frank, you do a great job running the Tackle Trading Twitter account over there. So well done over there. He posted a stock in industrials on Twitter that he was looking at, ROK. And that made me look at, okay, well, yeah, I looked at that setup and I was like, that is a really, really good setup. There might be, most likely, a lot of other great setups. And so what I did is I went to FinViz and I ran a bunch of scans specifically on the industrial sector. And I found, like, Tim, it was astonishing to see how many good setups that are in industrials right now. And I labeled 15. Okay. I got 15 stocks here. And I want to quickly go through each one of these 15 stocks. And then I want to talk to you, Tim, about how do you go about breaking down which ones you're actually going to trade, because obviously we're not going to put 15 trades on in the industrial sector.
Sure.
If I find 15 good setups, I might make 2 or 3 of those trades, right?
Yeah.
So I want to go through that and have an open conversation about how we select the ones that we think are the best trade candidates in that capacity. And so I'm just going to quickly go through this, do the analysis, and then we'll talk about it. The one Frank found was here on Rockwell Automation. Love the price momentum on the short term, getting above all the moving averages, the 200, the 50, the 20-day moving average, normal retracement back down into the average. And I'll even give you a little Fibonacci because I know you love it here, Tim. I'm going to give you a little Fibonacci action. And as you can see, it's kissing off the 38. That is a beautiful technical setup. Obviously has not triggered. We're still coming down, right? That thing can get to the Goldilocks between the 20 and the 50, okay? So again, Goldilocks condition on retracements, ladies and gentlemen, is it's got to retrace into the 20 or in between the 20 and 50, between 38 and 61 on the Fibonacci. So we're looking at a particular Goldilocks type situation on Rockwell here. ABB was another one I found. Short-term, good, consistent trend lines here, Tim. I love consistent stocks with consistent trend lines, as you can kind of see, right there on the trend line. Now, this one is a bullish retracement coming back down into those rising moving averages. tough on the trigger because it's below the 200, but we've seen stocks. You've just seen Rockwell. Once it gets above the 200, sometimes it can run on top of that. So ABB is something I'm looking at. AME, that's AME. This is Amtech. Same type of setup, above all your moving averages, coming back down into the moving average. Love that technical setup. Cummins here is a company. I just kind of like this company. It's kind of like Hog for me. I just kind of like it. It makes me think tough American.
Well, there's a big Cummins, plant down where we grew up. Right.
Yeah, there is. It just makes me think American. Whenever I think of stocks that, even if they're international and they sell a lot of goods internationally, every company does that. Just makes me think American. It just makes me think tough. That's what it makes me think. So, and if you're not American, I'm sorry if I offended you on that, but that's just my personal opinion. But I love the technical setup here on Cummins. First buy signal you've had on Cummins in months and months and months, coming right back down into the short-term breakout channel on Cummins. You also have Dove, D-O-E. This is Dover. This is a little bit of a different technical setup here on Dover, Tim. A little bit of a high base type situation.
Well, let me cut in on that for a second.
Yeah, go ahead.
I want you to think about something as you're going through this. I'm fascinated by this. If a sector is set up a certain way, do you prefer to have a pattern that's similar to what the sector is showing you or anything bullish? See, the XLI you're interested in on the bullish retracement, but this would be a high base breakout. Does that play into it at all?
Yeah, I'll tell you, I love high base breakouts off retracements in the sector. Okay. That means that instead of the stock coming down like the sector did, the stock held its strength at the top. You didn't see any profit taking here. This is just short-term consolidation. And if that sector confirms and we break out on Dover of $90, Tim, which would literally only take one day, that shows you that this sector has a ton of momentum going into it. And Dover breaking out of that 52-week high, breaking out, that has the ability to run with it as well. I love breakouts off retracements. That just shows you a lot of strength going into it. FLS here, short-term retracement off huge price movement over the last couple months here. ITW, very similar to on Illinois Tools Works, very similar to what we're seeing on Cummins. Reversal, Tim, breakout out of a reversal. This is a W formation here. It breaks out of the W, retraces back down. If I flip that upside down, Tim, we call that a kiss of death on the bear side. This is a hello goodbye on the bull side. I like that one on ITW as well. I know you might not love Lockheed Martin, but Lockheed Martin is breaking out right now at a short-term resistance there. I like that one as well. 3M, a juggernaut in this industry, is fighting to get back up above the 200-day moving average. Very consistent on its short-term trend right here. PH right here got up above its 200-day moving average, retracing. Huge momentum in strength here coming into Parker Hannifin. RXN, same type of thing. But look at this one, Tim. Big momentum up, reduction in volume on the sell-off, and it's coming into the breakout channel right there. Broke out of $31 for the entire year. This has been resistance, and now it's support. Love that technical setup on that. SNA standard. Look at that trend line.
That's a beautiful
that trend line there. I mean, just kissing that trend line there. Easy trigger on that one above the highs of the day. Easy stop loss underneath the 20-day moving average. TKR, same type of situation we had. Breakout of fairly important resistance levels, retracement back down. Love this setup on Timken too, because you got it coming into a significant whole number of $50. Love that one there. And then UTX, this is United Tech. Love the retracement here, Tim. I mean, I just quickly went through 15 stocks that are all tradable in good technical setups in a sector that has been playing catch up in an industry, that is setting up for a potential, the first time in months. And man, you could trade them all. But the question I have for you here is, how do you go about breaking down what we call that watch list, right? That's a bullish industrial swing trading watch list. So how do you break down those 15 charts to go to the point where you're like, wow, that's the stock I want to trade, or I'm going to make those 2 to 3 trades.
See, Matt, the daily routine and the stuff that we do on the halftime report is very deliberate, and we do it in order for a reason, guys. See, there's always something you can trade, and if for me, the way that my brain works, Matt, I work from a deductive level. I start with the big picture in the market. I then look at my account, my portfolio, and what I have. I think about what I need, and then I look for opportunities that fit for what I need. I always am thinking at portfolio level first. So if I'm looking for a bullish opportunity, industrials are screaming it today. There's no question about it. So then you break it down into a watch list. If you don't already have one, you do a scan, and then you go find some industrial stocks.
Everybody has this watch list now.
Everybody.
Right?
Well,
everybody has that watch list now.
So you're breaking it down, you're breaking it down, you're breaking it down. And then finally, when you get down to it, how I would take this analysis from this point forward, the first question would be is, can I and should I be doing credit spreads? Based on some of the analysis, I would probably take all of them and run them through the cash flow option spreadsheet, Matt, that tackle theta spreadsheet, and run the bull put analysis. I prefer bull puts.
Anything over $100 here. Anything over $100 should be put into that theta research spreadsheet and run your numbers, run your business, because those are all great bull put candidates.
Well, and I would also try to disqualify some. I would take a list of 13 or 15 and try to break it down into like 5,
Tim,
6.
I get that. But Tim, you run the numbers in the theta research spreadsheet, that's going to break it down for you.
So you can do it that way. You can also disqualify on earnings. You want to double check the earnings as you're going and see if there was anything that stood out. Not a lot that did. I'll tell you out of it.
Just real quick, Cody makes a great point here. Okay, Cody Potter, great point. And thank you, Cody, for being an amazing pro member over there. He says, check the ATR buffer. That's what the theta spreadsheet does. Yep. You run your numbers, you check all the accounts, the ROI, the probability, it checks the ATR buffer. And Cody, the ATR buffer is probably one of the most important parts of that spreadsheet, because that tells you how many average days down you would go until it hits your strike price. And so if I'm looking at, and we're not going to run the spreadsheet here today, but if I'm looking at a bull put on Rockwell versus Lockheed Martin versus, say, SNA versus UTX, and I get 4 ATR buffer on Rockwell versus a 3 ATR buffer on UTX, I'm going to take the 4 ATR buffer, even if I have a less ROI potential.
Well, and I guess here's the major point with what you're saying, what Cody's saying, and what I'm saying is, guys, everything should just fit within the design of your overall business. You shouldn't have to reinvent the wheel every day. Now, if you're out there and you're thinking, well, I don't even know what the hell you guys are talking about. Well, that's okay. You take it a step at a time and try to solve one problem at a time. If you're a good enough trader to where you can find these opportunities, you then break it down into the nuance, Matt, so you can make a decision, and it really is. It's a cross analysis. You're looking at one versus the other.
That's a great point, Tim. If you're sitting here watching the halftime report today, or you're watching it later on replay or whatever it is, and you're like, I don't get what these guys are saying. And then you're looking at, Cody talking about ATR buffers and Marie talking about, the trade setups. You got to realize that Cody, Marie, and everybody else in the halftime crew, they've went through education. Yeah. That's what they've done. They've made a decision to educate themselves through, whether it's tackle or legacy education or whatever the case might be, reading books, whatever it is, right? They've made a decision to educate themselves. And now they're in an environment where, Cody's saying, yeah, I'm finding lots of stocks to do bull puts on, and then he's making comments, check the ATR buffer. That's something Cody couldn't do 3-4 years ago. And now he can do that because he's went through that process the same way you went through that educational process 13 years ago. Yeah. It's sad that consumers, you said it yesterday in the Cash Flow Condors webinar, Tim. It's sad that consumers will minimize what they can do in the long term, but they overestimate what they can do in the short term. Well, guys, if you're not going to put forth the effort from an education perspective, you shouldn't trade in the first place.
I agree with that. By the way, as you were going through all those, I saw so many good setups. One that stood out to me was this one you're looking at, UTX. I love that pullback. I love the candlestick relationships too. See, my eyes will go to the very end of the chart and look at those last 3 candles, Matt. Small range candle, doji type candle, hammer type candle. We're almost a trigger.
We love the hammer.
Yeah.
We love the hammer. The hammer is a very bullish candlestick. I'll tell you one of the discounts I do when I'm building the list, right? Mm-hmm. One of the biggest discounts I do, because primarily I am an options trader, right? So one of the discounts I do is I just go look at the liquidity in the options market first, right? So if I'm looking at, say, UTX, and I see I got all these expiration dates and I got weekly options, that is a typical indicator that you can do a lot of different strategies on, whether it's theta positive trades or delta trades, right? You look at, say, PH here, I'm dealing with $186 stock, but at the same time, I don't have the weeklies here. I got an October month, I got a November month. And so if I'm looking at the October month, I'd have to go in and look at my deltas and whatnot. And I just, Parker Hannifin is a great type of technical setup as well. But because I have liquidity concerns in the options market, you couldn't do anything, that aggressive here, unlike you can with UTX. So one of the things that you can do, guys, even if you don't understand advanced options yet, is make sure you're trading liquid companies, both from the stock and the options perspective.
I love them. By the way, I also like that MMM probably. I'm looking at all these setups and trying to break it down just like anybody else. I like this relationship. I'm not as much of a true moving average believer as you guys are. So that 200 doesn't bother me, but I get it. Yeah, I like the pivots, higher high, higher low, higher high, higher low, pull back into, a bullish trend zone. And I do like that. I also, you got to ask the question, why not just buy Boeing?
No, Boeing did not make my list because it's not triggering. That's why it didn't make my list. I have no problem with buying Boeing above 375 or a retracement down to 360.
I'm still watching the stock like a hawk. Obviously, a Tackle 25 stock. Good find in the industrial sector here, Matt. I love that. Cody, did any of those stand out to you, young man?
From the industrial sector or just my pick of the day?
You can do either one.
My pick of the day, I got to go with Dollar Tree. That thing popped on my radar this morning, and I love it.
Yeah, it's scatter report pick for the last 2 weeks as well.
I think that was a Tim pick, so I think I'm getting this from Tim's option report.
It's a team pick. By the way, I don't want to start taking credit for him when we all literally spend hours and hours together picking them together. So it's a team effort, Matt.
Oh, come on, pat yourself on the back.
And actually, something that was pointed out at the Coaches Lounge, which I think is even better of a setup of this one, is go to the weekly on Dollar Tree. If it breaks that 200 on the weekly, it's got plenty of room to run.
Sure.
It's currently below the 200 if it closes.
I'll tell you though, Cody, that 200-day moving average isn't that widely followed on a weekly chart.
By the way, Nike has gap filled already.
I know.
You guys see
that? I'm sorry. At some point, Nike's going to come down, through the market cycle, and they're going to lose 50% of their value the same way every stock does in a market cycle. But I'm really enjoying Nike just making money right now. I'm just enjoying it, Tim.
Nike is beating the haters down. There's no doubt about it.
I was an Under Armour guy, and I'm switching to a Nike guy.
Is that right?
While I wear Disney is what I'm wearing today, Disney.
By the way, so many stocks performing very, very well. We don't have to dig into them too much. Square has been a juggernaut. We talked about that recently. Wayfair has been a juggernaut. We talked about this recently. There's quite a few of those.
CRM, give CRM a shout out. It's breaking out all-time high.
Well, and Matt, I think this one's an interesting one because you and I had a long conversation about should we profit take or not. And we basically.
Can I tell you what I did?
Did you?
I locked in profit on Microsoft. I kept CRM.
That's smart. When we were at about 157, Matt and I were sitting there chatting like any trader does, and we're thinking, okay, do we have to lock this in? We got a Fed meeting tomorrow, all that kind of stuff. And you stayed with it. Very good job on that. CRM, you've been nailing that for a couple months now.
I just like this company and you're more consistent trend than CRM right now.
Yeah, very good. I'm looking at all my scans, all my watch lists. The only one I think that might still be triggering here that I am actually looking at a bull side upside play here is Costco, COST. It's lagged the broad market because of sector weakness.
Hasn't triggered yet.
It has not triggered yet, and so you still have that in front of you. I will be watching this.
It's got to trigger above that 20-day moving average. And this is the patience it takes sometimes because it's just stagnating in that bull area. And you're like, oh, I just want to make a trade. Nope. patience, wait for the trigger. The trigger is above the 20-day moving average.
You know, I want to take one last look at Tilray, TLRY, still obviously heavily traded. We have to talk pot stocks here today.
But do we?
By technical definition, that is a pivot trigger.
Yeah, well, everything I've said on the 20-day moving average can be applied on Tilray, and I'm still.
Hey, don't you believe in the efficient market theory? Everything's baked into the price. You should just look at the chart. Doesn't matter what it is, right?
Is that a play on words? Everything's baked into the price. Was that? I don't think you meant to do that.
I did not.
I don't think you meant to do that, but yes, it is baked into the price. So, you know, hey, listen, anybody who's made money on Tilray, congratulations. Anybody who's lost money on Tilray, congratulations. You deserve it. I'm staying away. I'm not touching this stock. I'm not touching it. It's hyperbolic craziness that doesn't make any fundamental sense. Congratulations. I'm going to go buy CRM. I'm going to go buy Boeing on a breakout. I'm going to go, you know, buy 3M on a break of the 200. I'm going to go trade those liquid stocks.
For sure. And that's all I got here today. If you guys are interested in that cash flow condors, I got the replay link right here, Matt. It's about an hour and a half webinar, you know, and if you've got that system, make sure you go out and take advantage of it. You know, I think it's a fantastic system.
If you already have the system, I mean, really kind of just view that first hour, Tim, when you were in teaching mode. I mean, that was beautiful. So if you already have the system, just go review that first hour, because it'll kind of help you understand, you know, the dynamics of the system. And if you're a legacy student and you haven't been taking advantage of cash flow condors, make sure you already have access to it, guys. Go out there and, you know, watch the videos and start going to the mastermind groups and do it the right way. But it was a fantastic webinar. Looking forward to more. And also, from now on Fridays, guys, something exciting. Fridays are typically a little bit of a lax day. And so after we get done with our market skyline, we're going to do a deep dive into one specific technique. It could be understanding the banking cycle, Tim, the economic cycle. It could be, you know, breaking down how to buy call options, breaking down how to buy put options, protected puts, covered calls, naked puts, covered, you know, calendar spreads, diagonal spreads, inverted flies, you know, you name it. So if you're new to the market, guys, and you're struggling with some of this terminology, every Friday we are going to break down one specific technique or strategy to help you apply that in the market. And especially on Fridays, because on Fridays, Tim, right after we get done with the halftime report, we do go into that scatter report meeting, and, you know, there's going to be 30, 40 trades that we put out there in those reports.
There's no question about it. We got a lot of work here as we're heading into the weekend for that. You know, one thing I like to do on a Thursday, Matt, as I'm prepping for the weekend, is make sure I've covered all my risk in my portfolio as well. Guys, be a top-down thinker and think, because you're always going to find good trades. If there's one thing that the halftime report has shown you over and over and over, is we can find a good trade almost every day, you know, and well, there's always something to trade. I'm telling you right now, I've traded long enough. You can find something that has probability with you. Doesn't mean you should trade every day, but there's something out there in the market, Matt. I mean, whether it's in the commodity market, the currency market, stock market, options market, but you got to have a structured approach to your business. I love the XLI analysis today, that breakdown into the individual components into that space. I thought was fantastic. Great job by you. That shirt is fantastic. Makes me want to go golfing. Cody, anything from you, young man? Great job out there. Everybody say great job, Cody, by the way.
If you go golfing, invite me. That's what I have to say.
Cody Mackey is he's the producer for the halftime report here, guys. You've seen him every day here. He does such a wonderful job preparing Tim and me to get ready for the halftime report every day. He literally sends us. I want to show it to you guys. I'm gonna show Cody's prep work. You guys, let's see, where did I put that prep work, Cody? I think I already put it in the trash.
Oh, well, thanks.
I
mean, it's already a day old. It's over.
Well, it doesn't need to be, you know, taking up space in my precious little inbox here. So I just put it in the trash. I've read it and everything, but I do want to show it to you guys. This is what Cody does for us to make us look good on a daily basis. If we do in fact look good, do we look good on a daily basis, guys? Does Tim and me look good? I mean, our analysis, not the way we look, because we're
not my haircut.
Tim, you need a haircut, and I need. So, but no, I'm
to.
saying our analysis here. He walks through everything here every single day, puts this together for us so that we can come here and just do our job in helping you guys apply your daily routine on a daily basis. Cody, great job.
Love it,
on
Cody.
that, let's go ahead and take that little ABC question I put at the top for y'all today.
Ooh.
What did the very top, something fun right there.
Okay, where are we at? Survey.
Without looking at the chart, what happened?
Okay. I have not looked at the chart. Did it trade mostly flat, soar as much as 60, jump at the bell? Are we talking today or yesterday?
Yesterday. What did Survey Monkey do yesterday?
I'm saying, okay, now I promise you I have not looked at the chart. We tried to look at it yesterday and we couldn't get it to work. And then I just never thought about it again because I don't trade IPOs. I'm going to say up in the first little bit, sell off through the rest of the day. That's what I'm going to say.
Tim, what do you got?
Well, I got
to pick an ABC as well, Matt.
The chart.
What would that be then? Jump at the bell. Okay, C. I'm saying C. Jump at the bell, trade lower throughout the day. Saying C.
Survey says, I see.
Now, Tim can't go
clever.
Even if he thinks it, because then he'd just be agreeing with me.
This is too cutesy for me to play along. I'm not taking a survey about Survey Monkey's performance on its IPO. I feel like we're breaking like some fourth or fifth wall. I don't know what the hell's going on. I don't like it.
That's a delay tactic, Tim.
All right, it's C. I guarantee it's C.
All right. No, actually, the answer is B.
Did it soar?
Yeah, it soared. Let me post.
Hold on.
It was B and C. It literally opened up and then sold off all day. SVMK.
Put it in the chat, guys.
SVNK.
If you responded B, congrats yourself. Lifetime supply. Yeah, blah, blah.
See, this is the problem with surveys. It's whoever set it up. And if they set it up incorrectly, you can interpret data incorrectly.
What are you talking about soaring as much as 60% here, Cody?
That's the answer that I have.
No. Wrong. The opening price was $18.50. The listed price on the IPO was $12 to the people who had already bought it, the insiders. So if you're looking at it from the IPO to the listed price, C was absolutely correct. If you're looking at it from the $12 listed price that the banks put out there, then it's not correct. But the public price was $18.50.
All right. Survey says I am
survey
done.
Survey says it is C. It is C. They said B, but I agree with you guys. It is C. Like, look at that chart. It looks ugly.
Yeah. It's just going again. IPO listed price initially was $9, then $10, then $12. It was released at $12, but the public price is the one that the public gets, and that was at $18.50.
I've got this one watch listed, by the way. I don't trade IPOs. We've talked about it before. Just on that note, guys, we don't play IPOs, but I will. I've been getting more interested earlier, Matt. It used to be I had to wait 6 months for an IPO to settle in. The options
they're quicker. They're quicker now.
In fact, I didn't even check the options. Like, check the trade tab.
You could trade when BABA got listed. You could trade BABA options like literally that day.
That's crazy.
Like usually it's months and months and months and months, but no, it doesn't have options yet.
They probably will list some within the month, I'm sure. Maybe within the week.
Well, SurveyMonkey CEO came out and said yesterday that the survey business in America is a $25 billion business. Do you believe that?
People need data. I'm going to tell you right now, businesses need data. I don't know. Maybe because it drives marketing, it drives automation, it drives your customer experience. I mean, just think about what we do, how much information we want to have about even what's going on with trades. I mean, data is critical. And if that does drive it, maybe.
Every company drives surveys.
Yeah.
Every company, every political party, everybody drives surveys. I don't know if I buy the $25 billion yearly argument, but it's certainly something that is a growing industry, especially online.
Yeah, very good. All right, guys, Halftime Crew, we're done. We're out. Give us a like, give us a share. Go check out that recording on the cash flow condors. If you've got some time here today, I'll pop that in the YouTube channel. Good job, Matt.
Good job, you.
We are done.
Later, everybody.